Hello and welcome to this week's episode for SPY Trader Now. I am your host. My name is Ken, and our model portfolio as of May 6, 2023 is up 5.66% compared to the S&P 500 buy and hold investor, who is currently up 7.76% year to date. So we're trailing behind the buy and hold investor by a little over 2%. Because this has been a very difficult year to try to trade the S&P 500, I must tell you. But we are still, even with that, we are still hanging in there. Here is some past results for SPY Trader Now. You can see that in 2022, our portfolio gained 21% compared to the buy and hold investor, down 19%. And here is 2021, up 78%, 2020, 100% return. Fantastic year. If you want to see how I do this, go ahead and hit that subscribe button, ring that bell to be notified when I post a new video, and smash that like button down for me right now to help me promote this video. Here at SPY Trader Now, we buy, sell, and trade the S&P 500. Here's a chart of the S&P 500 just to show you a few of the trades that I made during the last week. So on 4/24, I ended up buying a put, and this is the exact put that I purchased, and that was on this candlestick here, hoping that the market was going to come down, which it did, and then it came up, hit a resistance, and came back down. But it is showing such strength right here that on this day here, I decided to close my put option because I felt like the market really isn't going down to my satisfaction, at least not in the short term. So I closed that put position at a small $7 loss on Friday's trading. I also earlier in the week on the 2nd purchased a cash secured put option with the 406 strike price that expired on Friday, and that particular option expired out of the money because we closed at 412.63. So I just pocketed that cash that I made on that trade. Last week, the S&P 500 lost 0.79%. Here are those trades that I just told you about. If you want to pause the video, you can look at the exact trades. This is in Pacific Standard Time is when I made this trading. Here is all of my trades for 2023. If you want to go back and see all of my trades for the last 3 years, you can head over to spytradernow.com. There'll be a link down below in the description. Also, if you would like to sign up for my real-time trade alerts, you can do that at spytradernow.com. Here is our equity curve for the model portfolio in 2023. You can see how well that's developed. This is the equity curve for the buy and hold investor for 2023. And here is the two equity curves combined on the same chart on a percentage basis, so we can see how one portfolio compares against the other. So the good news is that on my portfolio, at least it's kind of slow and steady going up compared to the up and down zigzag of the buy and hold investor. But the bad news is that the buy and hold investor strategy is currently beating our strategy. So we've got some work to do to get above that line. That is our goal here at SPY Trader Now. We have plenty of time left in this calendar year to do so. Last week, the Fed Chair Jerome Powell raised interest rates by 25 basis points on May 3rd, bringing the federal funds rate to 5 to 5.25. Earlier in the year, CNBC had the terminal rate pegged at 5 to 5.25. We are at that terminal rate right now. But on the announcement that Fed Chair Jerome Powell made on that rate hike on the May 3rd, he kind of stated that there's a possibility that if the data requires it, he'll go further than this 5 to 5.25. He could still raise rates more. So the market at first didn't like that, but as of Friday's action, you could see how bullish the action was. You can find out all of this information at these links, and they'll be in the description down below if you'd like to explore them on your own. The next Fed meeting announcement will be on June 14th. Will we have a 25 basis point rate hike? That's why there's a question mark. Now we're looking at things from a bond market outlook, and we want to pay attention to the bond market as it's 4 times the size of the stock market. And currently the bond market is telling us to be very leery of being in the stock market because we have an inverted yield curve and rising interest rates. So we're going to keep that in mind when we think about how we want to do our trading. This is not a normal condition. I can't wait for this yield curve to be corrected and back to normalization. What I mean by that is I can't wait for the shorter term treasury rates to be earning a lower yield than the longer term 10-year treasury rates. Right now it's inverted and backwards. This is unusual and not normal, and we want this to correct because we really can't have a good strong bull market with this inverted yield curve. Now we're looking at things from a valuation standpoint on the PE ratio according to current market valuation, CMV. They're telling us that we are overvalued by 1.1 standard deviations, so we stand right here. We know that 67% of all items are between the +1 and -1 standard deviation, and 95% of the time we're between the +2 and -2. So we're at the +1 right now, so caution is advised, and we're overvalued. Here's the Fear and Greed Index. Right now, greed is at 59. 1 week ago, we were at 60, so we're kind of moving along steady. When we're kind of in this territory, when the needle is between here and here, the best opportunities is to make money with option premium. And stay tuned in the video and I'll show you that's what my intention is for next week's trading. Now we're looking at things from a seasonality standpoint. This is a S&P 500 going back 20 years. We are currently in the month of May, 74% probability that we're going to close higher than when we opened. Right now for the current month we are down 0.79% with a 74% probability that we're going to close higher. It's okay to go sideways to slightly long with seasonality when you keep that in mind. Now we're looking at it from a very long-term outlook. Monthly chart going back 20 years, S&P 500. As long as we stay above this line, we're going to be pretty much in a bullish configuration. The MACD, which is heading towards its signal line, is beginning to flatten out, almost going parallel. You can see here that the stock market came up and is kind of tapering back down here. So it's hard to say exactly what's going to happen, but I'm looking at more of a sideways action happening right now because I see strength in the market. That's why I sold my put. On the intermediate term outlook, 5-year chart, weekly bars for the S&P 500, I see a double top formation happening here. But personally, I don't trust that double top is going to actually be that ceiling and bring us down. Right now, I kind of see a trading range between here and here, and with a possibility that this double top is going to break out and it's going to go higher than its current price of $412.63. So we shall see, but that's the way I'm interpreting this market right now in this chart. Here is a short-term outlook for the S&P 500, and you can see those trades that I made and when I made those trades and everything like that during the past week or two. And that is what is happening. We are looking at the MACD bottoming and coming up towards its signal line, slow stochastics bottom coming up towards its signal line. These are all fairly bullish indications that we are actually going to continue to move north on a short-term outlook. Now we're looking at it, instead of a 1-year chart, it's a 6-month chart for the S&P 500, daily bars. You can just kind of see that a little bit better. So it's either going to break out or move sideways from my perspective. I see the stock market has put in a floor at this trading at about 405 approximately for right now on a short-term basis. Now we're looking at the VIX, or the Volatility Index. And you can see that the volatility hit a floor here, came up, but then met strong resistance and immediately was shot down. And look at the next bar, which was the last trading days of action, because these are daily bars. And then that last trading day, and you can see how the fear is just coming right out of this market. The MACD has topped, and it looks like it's wanting to come back down towards its signal line. Slow stochastics is also topped, ready to cross below its signal line. It looks like, from a fear perspective, we're going to be in this chopping range between here and here, not exceeding this ceiling, not going below this floor. We're just going to be bouncing around. This is a good time for us to take option premium and put that in our pocket. Now we're looking at a chart, 1 year daily chart, S&P 500 on the Think or Swim platform by TD Ameritrade. We are just below the +1 standard deviation. When the market was coming down and it met that strength right here, this is the green line, is the 50-day moving average. We did not even reach the 50-day when we bounced and came up. So I'm seeing strength above the 50-day moving average. Here is the same chart, but instead of going back 1 year, it's only going back 3 months of time. And in this 3 months of time, you can see the bars a little bit more clearly. We are below the +1 standard deviation. We're here, and we have a good possibility of coming up, surpassing the +1 standard deviation, and coming into this range here. We're between the +1 and +2, somewhere around the 4,819 level, somewhere in that level. So I just gave you a ton of information on how I'm looking at all the different time frames, all the different charts related to the S&P 500. Now comes the critical thinking. What are you going to do with all that information? And here's my take on what I want to do with that information. As of 5/6/23, market summation, according to me, SpyTraderNow.com, the market is showing strength to me. And making money on option premium makes sense to me. On Monday, 5/8, I plan on selling to open 2 cash secured puts with our model portfolio with a 5/12/23 expiration, 406 strike. Currently, as of when I pull the data up on Saturday, that is yielding $1.20. And when I put that into my option calculator, and by the way, if you want this free option calculator, just go ahead and head over to SpyTraderNow.com. You can download it for free. It's annualized out at a 27% annualized return on investment, which is not bad cake. So this is not a bad trade, but the market has a couple of options on Monday's trading. Now, what the market could do is the market could go up. And if the market does go up, that option premium is going to be not as attractive. It's not going to earn a 27% annualized return on investment. If the market does jump up on Monday, and if I do want to capture that 27%, instead of doing a 406 strike, maybe I got to push that up to a 408 or 409 strike. So that's a possibility. The next possibility is that instead of the market going up on Monday, the market comes down on Monday. And if that's true, that will make my option more attractive than a 27% annualized return. So that is how I interpret what I'm going to do for next week's trading. I hope you got something out of this video. If you have not done so already, hit that subscribe button, ring that bell, smash that like button down, and head over to SpyTraderNow.com to learn more about me and to sign up for my real-time trade alerts. I thank you, and I wish you good trading.